Gbemisola, a pleasure to have you join us on Closing Bell West Africa today. It's the day 3 of activities so far within Nigeria's fixed income and FX space, as well as the equities market. Walk us through what trading activities have been like so far.
Hi, good afternoon. Thank you for having me. Well, the market slightly quiet today. As you rightly said, the activities of the bond auction is what is determining the direction of the day. However, the week had opened slightly bullish as a result of credit into the system from bond coupon and the FAC credit which came in on Tuesday. Traders had tried to pick some maturities, trading around 5 and 5.5% on the OMO maturities so that to not leave idle balances in their accounts. On the NTB maturities, we are seeing trade at 1% and 3% level. And we had some investors also pick there so that to be able to have some investment. But for the bond market, it rallied at the start of the week and yield compressed across all maturities between 8 and 10 basis points. However, yesterday we saw some slight sell-off on the 2050 maturity to be able to take advantage of today's bond auction. Last week when the third quarter calendar came out, it ushered in a new security, which is the 2045. It is a 25-year maturity. Also, we saw the reopening of a 10-year bond, which is a 2026 instrument. So at the auction today, a total of 130 billion is on offer. We have 4 maturities, which are the 2026, the 2035, the 2045, and the reopening of the 2050. Of these 4 maturities, only 2 were on the auction last month, and they stopped at 11% and 12.15%. For the 2026, which currently traded yesterday around 6.9 and 7%, market is expecting the stop rate to come out around 6% level. For the 2035, we're expecting 10% for the new stop rate. For the 2045, it most likely will mirror what the 2050 did, is currently trading in the market. So we're looking at 11 and 11.5, while the 2050 would most probably come out at 12% level. With all this, looking especially at the 2026...
So, what's driving your... I was looking at your projections here and I was just wondering what's driving your expectations that the bullish activity that you just talked about will remain within the treasury bills and bond space specifically?
Okay, as I said earlier, we had the FAC credit come into the system. This raised liquidity up to 445 billion as of yesterday. We also have a lot of coupon payments coming in this week. Some came over the weekend and we have 2 more this week. This is what is driving the activities in the fixed income market. It is also making yields go lower as few investment options are available and limited sources. Demand will remain huge and yields will continue to compress further as this demand trickle in. However, barring any CRR debit this week or depending on the outcome of the bond auction, if system liquidity gets a bit tighter, the end of the week might not be as bullish as earlier expected.
So 2 days after the latest MPC decision, has the market responded to that decision in any interesting way so far?
Well, the market had expected the MPC to maintain the NPR at 12.5%, and the CBN has cited that the 100 basis points which they cut in May has not yet had a full effect on the economy. However, for the fixed income market, liquidity plays a major part in the direction of our rate, hence the NPR didn't have any significant impact. As I said, the liquidity situation, which determines the rate direction, market would have expected maybe a slight drop in the CRR. Maybe that would have helped ease the liquidity situation which banks are facing right now. But as all the parameters was held as constant and left unchanged, we didn't see any impact in our market. Also in the past, the NPR has not really had any impact on the direction of interest rates. And as the central bank continues to use unorthodox measures to maintain liquidity, MPR and the interbank rate, there's a big gap between those two rates as we speak. For interest rate in the securities market, the exclusions of bank and the local customers and the corporates, especially the PFAs, has been the major driver of that market, as they've been unable to participate at the OMO auction. The yield has crashed significantly on the NTB. Hence the reason why I said the MPR outcome did not have any impact in our market since Monday.